focusing on ESG investments. Bill Davis, portfolio manager, Hennessy Stance, ESG large cap ETF. So what are they saying about ESG these days? Sometimes it's loved, sometimes not so much. Right? You think that's a fair statement? People fall in love with ESG and then sometimes the money comes in the way. I don't know. What are your thoughts?
Well, first of all, hi, Nicole. Good to see you again. Look, I think that ESG isn't really going anywhere. And I want to point out that we actually started on an ESG path over 10 years ago, and we're not dissuaded at all by, sort of the political football going back and forth in the market. I think that the media tends to focus on the tails of ESG, and those tails could be described as, on the one hand, big, maybe inauthentic asset management firms jumping in, viewing this as an opportunity to generate higher fees, not being particularly thoughtful in their approach to all of this. And that's, I think, a fair criticism, right? On the other hand, you've got the other tail, I would say, great example is in New Hampshire over the past couple of weeks, there was legislation to not only prevent any public fund fiduciary from considering, by the way, governance, because that's part of ESG, but also suggesting jail time would be appropriate for anybody who does. Unfortunately, that thing did not pass, did not move forward, but it, I think, points to kind of like how everybody focuses on the extremes, and what people are missing is that in the middle is where all the work is being done, and really nobody's going anywhere. Now, I would say some asset managers and maybe even some companies have gone underground a little bit. They're not talking about it as much, but guess what? Investors understand that climate risk, as one example, is portfolio risk. It's existential. It's going to affect everything on Earth one way or the other. I think Chairman Powell just 2 weeks ago actually mentioned this, and he pointed out that one of the lingering areas that is still very inflationary is actually insurance pricing directly as a result of climate risk. So investors are not going anywhere. They are still going to push companies to be more transparent and to be more ambitious around their decarbonization efforts. And I think the other side of the equation, I think companies get it too. I think companies understand that there's opportunity, there's job creation, there's attracting the best employees and the best workers, and being able to charge a premium product, because this is the kind of things that people want. They want greener products, not browner products.
Yeah, and this is something on the conference calls that people ask CEOs all the time, and ESG is a focus of making everything better, really, whether it's in the workplace, whether it's for the environment, and so forth, right? And you talk about climate, and these are things, particularly in the next generation, very focused on this. In the meantime, as you go about trying to pick stocks for the portfolio, you're recently adding a very popular name, and that would be Chipotle. Why does Chipotle fit into your portfolio ideas? Because it's an actively managed portfolio. Tell us.
Yeah, well, everybody loves Chipotle, right? So I think the answer is that, number one, a lot of ESG managers are simply data one tracking the S&P 500, which is increasingly concentrated at the top. And frankly, in our view, represents a lot of risk to investors. I think that the mega cap trade is sort of falling apart. I was reading just today, Tesla's down 50%. From its high, Nvidia down 20%, Apple down 17%, Amazon and Microsoft are, I think, down 7% from their highs. And, so I think in general, active management is really about looking beyond just sort of the market cap weighted names and looking throughout the economy and finding sectors of the economy and names within those sectors that just are less either analysts followed or just not as crowded of a trade. And, I would also say that, speaking of market cap weighted portfolios, those seven top names account for 30% of the S&P. We would never, on a quarterly rebalance, we would never be more than 3.5% in one individual name. Now, Chipotle, Nicole, we bought about a month ago. So in early April, I think it's up about 9% since then. It's grown to be 4% of the portfolio. It's in the top half of its sector from an ESG standpoint. It has strong sentiment indicators, and it's exactly the kind of name that we actually look for in our portfolio and across the entire economy.
Yeah. And look, I mean, McDonald's recently came out. I think they got hit a little bit, but Chipotle has been an incredible performer, getting set up for a stock split too, I believe, right? But has certainly been, since it listed here many moons ago, it has served its shareholders very, very well, Chipotle. Another name that you are adding is Newmont Mining. And now, are you adding to your position, or is it a new name to the portfolio? Why does it fit with your?
No, actually, both of these names were new this quarter. So they've been in about a month. By the way, we are actively managed quantitative. We have no loyalty towards any individual company. We'll hold a company as long as we think it makes sense, and then we'll sell it. So Chipotle, we actually haven't been in for a bit. Newmont has been in and out over the years, but it hasn't been in for well over a year. And it was a bit of a sad sack story, as you may remember. I mean, it actually bottomed out in February of this year. It missed some earnings last year. It's an example of something that we believe in strongly as an ESG manager, which is that there are sectors of the economy like mining, which tend to be out of favor from an ESG standpoint.
Yeah.
However, it's not like sectors are going away. Energy doesn't go away. Mining doesn't go away. What happens is there's going to be companies who do a better job of managing headline risk, and Newmont is one of those companies. I mean, they are very, very good at managing controversy. So they're a very strong ESG performer. You know, the implied volatility was probably the primary fundamental reason why we bought them. And that also is up about 9.5% in the last month.
Yeah, exciting to see some new names for the active managers to add to the fund. And also June 26th, folks, is when we'll see the Chipotle stock trading on a post-split basis. So I did double check that June date. Thank you, Bill. Nice to see you. Bill Davis, Hennessy Stance ESG Large Cap ETF.